My name is Adrian Nantchev, and this channel is all about helping you become a remarkable entrepreneur. So subscribe and press the bell notification next to it for the latest uploads. And this is episode 41 of 101 Entrepreneur Mistakes and Lessons. Prepare to shit yourself about money. As soon as you start a business, or as soon as you close a business, everyone puts their hand out for a fee, for a license, for something. You owe us this, you owe us that. Insurance, accountants, suppliers, other web developers, freelancers. Suddenly everyone wants a piece of the action as soon as you launch a business. So prepare to shit yourself about money. I'm not saying don't be scared. I'm saying be prepared for invoice here, invoice there. This is £10 a month, 20 quid a month here. Bloody hell, I'm telling you now, a few years ago, I'd have melted at that point. I'd have melted, because as soon as I hear £10 a month, I'm like, shit, that means I gotta perform. That means I gotta step up. That means I gotta have game. Fuck. You gotta push yourself. So you gotta, teleprompter free. You have got to know your numbers. You have got to be smart enough to know, to have a big enough margin, and confident enough to believe that you can actually perform. You can pay these bills. You can pay these invoices. Payment transaction, for example, will pay. Thankfully, they do a percentage based on how much you make. But everyone wants a piece of the action. You've got to know your numbers. You've got to know how much you're buying something for and selling it for. And I was told, not directly, but indirectly, well, I saw a video of him, Sheldon Anderson. It's like the 5th richest person in America, or 7th, something like that. He has these casinos in Nevada, and buildings, property. He's like a Donald Trump, but 10 times. But he's 10 years or 20 years older than him. And he says that you've got to change the status quo. And to change the status quo, you've got to have a big enough product, a big enough service. And that big enough product or service has got to have a damn high margin. Because you don't want to sell things that are 1 pence here and sell it for 3 pence. Respectable, 200% ROI. But if I can buy it for 1 pence and sell it for £10, astronomical ROI. And that's what you need. You need things that got damn good ROI that can keep the company healthy and alive. I've come to realise there's actually 4 products you want. Free. Something for free to build trust, to build relationships. Something cheap that's low value but high volume. And something expensive that is high value, low volume. Something that can be sold once every week, twice a week. The cheap thing is something that can be sold every day, and preferably automatically delivered. You don't want to handle that day-to-day running of the business bollocks. The last one, subscription. You need a subscription-based model or product or service that people pay you 10 quid, 20 quid a month, 100 quid a month to keep the balance sheet happy and active, keep the accountant happy, keep the company in the black. And also, if I can remember the point now, you need this money from the subscription is healthy for the balance sheet, healthy for the company. It means it's always predictable cash. There's always something there. Another way around it is your accounts receivables and accounts payables. These are the time elapse of. This is essentially money that's owed to you, and how much money you need to pay out. So £10 account receivable, £5 account payable. If you can decrease the time it takes for accounts payable to arrive to you from 5 days to 2 days, brilliant. And if you can reduce the time it takes for accounts payable from 5 days to 10 days, even bloody brilliant. Because that means you're getting cash fast and you're not paying anything out until a week or 2 later. It's much more relaxed on the balance. It looks nicer and it's much more easy to work with on the balance sheet because you've got plenty of cash and you're quite liquid. You can spend it here but then get another money back and pay it off here elsewhere. As long as what you're spending on, you get more money back. One thing that I learned, to actually come to think of it, this is key, is that every expense you have, I'm glad I'm recording this because I forgot about this. Every expense you make, it's got to be productive. It's got to be profitable for the business. Don't buy things that aren't going to increase your profitability. Don't spend your time on things that are not going to increase the income. That's what the team is for. They can do the day-to-day stuff. You, as the entrepreneur, the manager, the CEO, the chief evangelist, whatever, you need to spend your time on income-producing activities, IPA. Income-producing activities. In my second business, I was spending most of my time fulfilling the orders, walking to the post office and shipping it across the UK. Profitable, people loved it, amazing 5-star service, bloody good business. The problem with it is I was spending my time getting supplies, ordering online, fulfilling the order, packaging it and going to the post office to deliver it. Nothing wrong with this, but it's wasting my time. It's time that I could spend working on the marketing, working on the advertising to get more customers. And I could outsource someone to do all this stuff for me. But I didn't realise that. I knew it was like rough, hard grinding work. But I learnt the lesson. Focus on income producing activities. These activities helps the bottom line of the business. And the more money the business has got, the better. It means the more you can expand, the more people you can hire. Even the people you hire, they've got to be producing income. What is called revenue per employee or revenue per head. I think depend different people and different metrics. Essentially saying you've got to hire this person and they have got to be let's say you're paying them 10,000 a year, they've got to be giving the company 11,000 worth of value a year. And so this is why I think that when it comes to hiring people, you want talent, I want people. If this person's good, he's smart, he knows his stuff, I'll hire him. Because I know that I'm going to be better off. Even if there's no vacancies, this is my philosophy now in theory with management. Even if there's no vacancies, I'll take him because I know I'll find a place for him in my business, and/or I'll create something just for him. Because the point is, I hire him, I can do more stuff. As long as the revenue per employee is positive, you're in good numbers. Google has like £1 million or $1 million per employee, and they pay them like 70, 80,000, 100,000 a year, but they're producing like $1 million per employee for the company. That's damn good, very positive. You want to know your numbers. Alan Sugar once tweeted, or it was an interview or something like that after The Apprentice, know your numbers. Know what you're buying, know what you're selling it for, know the profit margin, know the expenses, know the accounts payable, know the accounts receivable, know everything, know the ROI and beyond. Know the employees' revenue per head. Even things down to EBITDA, if you're an investor. Earnings before taxes, EBITDA taxes, depreciation, amortization and interest. It's the wrong order, but taxes, interest, depreciation, amortization, EBITDA. And that's a good metric to know the real performance of the business. I wouldn't look at gross. Gross profit is nice, but it's a bit fluffy. Because like, here's 10 quid. Oh yeah, £5 goes over here, 3 over here, 50 pence over there. Yeah, you got like 1 or 2 quid left over. That's net, it's not the same. Look at net, look at gross, EBITDA, earnings after taxes, interest, depreciation, amortization. There's different KPIs, key performance indicators you want to look at in your business. EBITDA is one, revenue per head is another, average order value, what's the average order? You look at 100 orders in your business and what's the average value? Is it 10 quid, 5 quid, 50 quid? You've got to increase that, and there's different ways around that, marketing and discounts and all the rest. We want to look at ROI of the product. If you're buying it for £1 and you're selling it for £2, that's good. If you're buying it for £1 and selling for 10 quid, that's brilliant. Buying it for £1, selling it for 100 quid, fucking hell man, that's amazing, do it again. Things like that. I'm trying to think, what else is there? There's return on engagement, which is you're looking at your social media and/or like your email marketing, and you're looking at what's the engagement, what's the click through, yeah, what's the CTR, what's the bounce rate, how many people are opening, how many unsubscribe, how many people are unsubscribing, and how many people are subscribing. Is there a net or is there a positive or negative growth in your subscriber, in your email list? All these metrics, everything is quantifiable, and you've got to know your numbers, because that's what your business is down for, numbers. When you look at it, it's human interaction, but on the surface it's human interaction, face to face, but below that it's dictated by numbers, performance, metrics, what are called key performance indicators, KPI, and it's worthwhile looking at these online. Key performance indicators. So, the question of the day is, what do you not know about the numbers? What are you missing? What do you not see? What do you not know about the numbers? What do you need to know? It must be a feeling deep down inside, or it must be a mistake you've made, or ask your accountant, what do I need to know? Or say to someone, is there anything else worthwhile knowing? FYI, is there anything I'm missing here? What don't you see? For me, I started the hemp business about a week ago. The main problem that I don't see is the prices from one of the supplier tends to change. I'm not quite sure on what basis, a weekly basis, monthly, I don't know. Sometimes the products from the supplier are discontinued and there's not really a warning. There's a warning, but it's like embedded, or a notification even, but it's embedded somewhere. So it's a little tedious, but it's perfectly manageable. Just like changing prices every now and then, which is like, ugh, lazy. Other one is quite reliable. That's really it. Other one, just that. The other supplier tends to change the prices around, which is just like, ugh, effort. So what don't you know? Other thing that concerns me, and it's a bit of an unknown gap, which I'm trying to hedge against this, is if somebody in the UK, for example, buys a product from either of the suppliers, number one, it's going to come a long way, China or America, and we're going to have import tariffs, which are expensive. See what I mean? Everybody wants a piece of the business. VAT here, invoice there. It's like, fuck you. Nothing wrong with it. It's all voluntary, but it's like another expense. Really? Ugh. This is why digital products are so much better, because it's like instant delivery and it's like next to nothing for shipping. But hey, it's the world we live in. So what don't you know about what the numbers? What don't you know? What are you missing? What don't you see? What don't you know? So click on the subscribe button below and press the bell notification next to it for the latest uploads, and you'll see me again soon. How cool is that?